to Geared for Growth. I'm your host, Mike Mortlock from MCG Quantity Surveyors. A treat for you today. We have one of our previous guests, but somebody who is in rarefied air as a well-regarded property research specialist in Australia. I'm talking about John Lindeman. I asked John about his thoughts for the back end of the Perth property market. Is it likely to stay flat, or should we see growth kind of simmering along? I also asked similar questions of Brisbane and Adelaide, who are the other two markets that have done so well in the previous year. He gives us some insights into the impact of the Olympics on property prices, and we talk about the rise of Darwin, what he sees happening up there, some of the risks involved. He also gives us a bit of a deep dive into the Victorian market, specifically Melbourne, and leaves us with his three top picks for property investors to be looking at for the rest of 2025, which is worth the price of admission on its own. Here's John. John Lindeman, thanks for joining me back on Geared for Growth.
It's a pleasure to be here once again, Mike.
It's been a little while between drinks, and I've got to say the property market seems unrecognisable to perhaps the last time we chatted. I wanted to get you on to get your insights as a property forecasting legend in Australia. Starting off, what do you think has changed fundamentally after we saw the boom of Perth? It does sort of seem that property investors are chasing that next location that's going to do 20% growth in 12 months. What have you observed from the marketplace?
Very much so. It was a case of people seeing Perth as being a very affordable area to invest in. It had the lowest prices of any capital city at the time. And, of course, very high rental yields, a huge rental shortage, which meant that rents were going up. Very little development for quite a long time, so there was, a shortage of properties generally. And I think investors just went in and saw the opportunities. I was over in Perth about 3 years ago when our database was predicting that Perth could boom, and the locals all said, "Oh no, it can't possibly boom. Nothing's happened in 10 years." So they sort of missed out because they waited until it was really taking off. But the East Coast investors poured in, buyers agents all bought, and they've done very, very well. But the fundamentals of that market is still quite strong. If you look at the housing market, there's a big shortage of rental properties. Rental vacancy rates haven't gone up. And even though you'd say, well, the growth is going to slow down, it's, some people saying it could crash. No, that's not going to happen. It's just the growth will moderate. And a lot of investors are now pulling out. They've made a lot of money, doubled their money in 3 years in some cases, and are looking at other locations where they can do the same thing again.
You raise an interesting point there. It does sort of seem like Perth was the first market that I can remember people going in with a strategy, or let's just say property investment professionals, whether they're buyers agents or advisors, many of them went into Perth with the idea of a limited time horizon. This wasn't a buy and hold long-term strategy for them. Have you seen that happen in Australian property markets before? Yes, we chase the hotspot, but we tend to hold because the costs of coming in and out are so high. But when a market's doing 20 or 30%, that can almost be modelled in, right?
It can, and I think when you look at the lower priced areas, we've seen similar things occurring in Adelaide, the Elizabeth, Salisbury suburbs, where 4 years ago you could have bought a property under 200,000 and now they're at 600,000. Logan, Ipswich and around Brisbane, the same thing has occurred. But it took a long time, I think, for people's ideas about property market investing to change. A lot of it came about after the big mining boom crashes in 2012. People thought, hang on, this is not the way to invest. You've got to buy for the long term. And now that mentality is changing again to the get rich quick mentality, which of course is far more risky, but it is also very rewarding.
When you look at the Perth fundamentals, of course, I was cautionary for anyone that was asking me about Perth because it did have a roughly a 14-year period where the median house price stayed around that sort of 490 mark. The property market's done incredibly well. There's no argument there. I mean, it's still posting annual growth of 7-8%, but clearly on the decline. The affordability metrics still sort of look okay in Perth. So do you think it is destined to do another 10 or 15 years of flat, or it might actually chug along fairly well?
I think, well, what caused the last sort of boom and crash was massive overdevelopment. And we haven't seen that. Whole suburbs like around Alkimos were created and pretty much marketed to investors, East Coast investors. That situation is very different now. There's a massive housing shortage. Perth and WA receiving huge numbers of people coming in, not just from overseas, but also the East Coast, a lot of interstate migration. So there's still a housing shortage and still a rental shortage. So while I think it's going to moderate, it's certainly not going to end anytime soon.
Interesting. Well, that's good for anyone that feels like they bought a little bit too late in that cycle. It's not necessarily going to be flat for a long time. If we cast our minds back to 2024 and even to an extent right now, the three major markets were Perth, Brisbane and Adelaide. Obviously, those are all moderating at different rates. And, Darwin's a bit of an outlier, which we'll definitely come to here in a moment. What are you thinking for the Perth and Adelaide markets? Are they well past the peak of the cycle, or are the fundamentals still pointing to some solid growth?
I think I would have said that the bottom end of the market was going to be rather flat, but then, of course, the federal government came along with its first home buyer deposit guarantee initiatives. Interest rates have fallen, and they all tend to favour people who need to borrow most of the purchase price, so that's first home buyers. So we can see that the growth is starting to pick up again a bit in those lower priced areas. But in general, the way these property markets work is that it starts at the bottom. All the first-home buyers, investors come in. As you said, you could have bought a property in Mandurah for 300,000, quite incredible. That growth then upgrades through the market as people who have got properties decide to upgrade to a better house, a better location, and so the growth moved up through the market and has now sort of hit the top end of the market. So you've got the double view, the leafy green suburbs and the riverside suburbs of Perth, where they've gone up by up to 50% in the last year alone.
Wow.
And what that means, of course, is these are older people. They own their homes without any debt, and they have seen that growth occur and said, right, let's move out of here because it's time to downsize and use the federal government's initiative, which means they can put up $600,000 of the sale of the family home into super tax-free. So if you look at places like Busselton, absolutely booming. We've been there a few times this year already and had a look around, and prices have escalated dramatically, but they've got a long way to go. And that's what tends to happen. The downsizers decide it's time to move out of Perth. Same thing in Adelaide. People are moving to the south, the Fleurieu Peninsula, where you can buy houses in places like Goolwa and so on for around 600,000-700,000. So that's what's occurring. Also in Queensland, downsizers moving into places like Hervey Bay because they're extremely affordable for them. They're selling a house for 1.5 mil, buying something for half that, and they're set financially secure for the rest of their lives.
Mm. You mentioned affordability, and I think that is definitely a driver. I mean, even with the interest rate cuts, we still expect, I suppose, the cheaper end of the market to do well because that's where the investors are playing. And now we've got, much more of, many more places for the first home buyer grant rather than being sort of capped. In our data, the average purchase price is around about $550K for 2024. If you remove the outliers. And, if you go back to the beginning of 2024, there was places that you could go, right? I mean, Perth was the second cheapest capital market after Darwin. It's now kind of mid-pack. Darwin is the only one, I think, that's under 600. Hobart's pretty low at the moment. Incomes, I think, very, very strong in Darwin, and yields were as well at the beginning of this cycle. So you can kind of see some of the reasons why people piled into that market, but it is a small market. There's not a tremendous amount of transactions, but we've seen buyers agents come in and there'd be a lot of investor transactions. I want to know, is that a market that you expected to behave that way, or is this something that we need to learn about the state of the property market now, where there are big buyers agents groups that are looking for the next big thing and have such a volume that they can actually influence small markets like Darwin?
Yeah, that they can certainly make the market, as we say, and I think that's what's happening in Darwin right now. But the fundamentals are pretty much very low buy prices. So you're looking at where you could have bought $400,000-500,000 in Darwin and get a 3-bedroom house for that. Very high rental yields, but also the fact that there's been very little housing development in Darwin because of those low prices. Developers can't make a profit, and they just simply stay away. And so you get this emerging overall housing shortage, which then, of course, starts to push prices up. And as soon as that happens in these locations, we've seen it in places in Queensland like, Mackay, Townsville, Rockhampton, the same thing occurring. They all rush in, buy properties, and you've got to then look at, well, what's the underlying situation in Darwin? Well, the population's about Greater Darwin, 150,000 people, and quite unlike other states and territories, about 15% of the people move in and out each year, so they're highly transient, and also 50% of the residents of Darwin are renters, which also adds to much more volatility. So if you're thinking of investing in Darwin, and our database did pick up the demand trend and saying, hang on, this area could boom, but then I thought, well, who's doing the buying? And they're nearly all investors. So the key there is look at the rental vacancies, because if they start going up, then of course that market could implode pretty quickly. But as long as they stay low, it means the demand is supporting the number of buyers turning properties into rentals. So it just depends on the rental vacancies, really.
When I speak to clever people like yourself, I often hear that the availability of credit is probably one of the biggest drivers for property markets from a macro point of view, and then infrastructure or job creation, if you want to try and throw them in the same bucket, rates highly there as well. I'm interested in where you land on that, and from a infrastructure job development, it does sort of seem like there's quite a bit going on up in Darwin because of its strategic kind of military location. What are your thoughts there? The Geared for Growth Property Investing podcast is presented by our business, MCG Quantity Surveyors. If you're an investor or a property professional looking to get the best tax depreciation deductions for yourself or your clients, please get in touch with us at mcgqs.com.au. It's our mission to help as many property investors as we can to maximise their claims and maximise their property education as well.
It's very much, it's got three major bases, Air Force, Army and Navy bases there, which support a lot of personnel. They're nearly all renters. So that does add to the rental demand, but it's nowhere near what it was back in the day when we had Operation Border Force and engagements in the Middle East and Afghanistan. And what that did, of course, it increased the number of personnel living in Darwin dramatically. And so we had a boom there. I think about 10 years ago, Darwin briefly was the dearest capital city in which to buy property. So it went up
more
a lot.
More than Sydney, which people forget. I think it was crazy.
Yeah, it was. It was only for a short period of time, but there it is. It's come back a lot, and so it's got room to move upwards. But as I said, it's really the number of people moving in. It's got the lowest population growth rate of any state or territory. So apart from, I think, Tasmania is probably the only one that's lower. So while there's potential, there's also risk, and I'd be looking at very closely, as I said, at the rental vacancies. If they start to go up dramatically, that can lead to investors selling out and, of course, prices crashing.
That's a good thing for us to keep our finger on the pulse of those vacancy rates, certainly. When we're looking at, say, the CoreLogic results for May, 1.6% growth over the month and 4.3% over the quarter, it does kind of beg the question how far can it go? I mean, I know people like you love these crystal ball questions, but could it be a market that does 20 or 30% in the next 12 months?
Well, the more it goes up, the more likely it is it'll come down just as quickly. I think because it's being investor driven. You've really got to look at the underlying demand for housing. If you compare that to, say, Townsville, for example, where there's also some huge military bases, they're being expanded. There's a huge rental shortage, and so you can see the growth in Townsville is supported by demand for accommodation. That may not be the case in Darwin, so I'd be a bit concerned about looking at the rental vacancies.
Well, it's a big old beautiful country we've got here, and there's plenty of other places outside of Perth and Darwin to invest. A lot of people are casting their mind to Victoria at the moment because it does sort of seem to be a market that's at the bottom of its cycle. It's obviously had its let's just say it's face punched in with policy in the last little while, all the way back from the COVID lockdowns to the minimum standards legislation to the land tax sort of thing. But to some extent, we can kind of price all of that in. Where's your head at with Victoria at the moment? Because it does sort of seem that as far ago as 6 months ago, things started to get quite hot there.
They have indeed, and in some areas, the lower priced areas around the Bayside, Carrum Downs, those sorts of areas have gone up by nearly 15% in the last year. Also, good growth occurring in the outer suburban areas of Cranbourne, Melton, Pakenham, which is all first home buyer territory. And I think the other significant thing about Melbourne is not just the affordability, but the fact that 140,000 people arrived from overseas to take up residence in Melbourne last year. That's a lot of people,
It's
all
nearly
renters.
Darwin, isn't it?
Yeah, it is in one go. And they're nearly all renters, and where do they want to live? Well, those people, most of them are Sunni Muslim, and they want to live in the inner western suburbs of Melbourne where there are mosques and schools and, friendly communities. They feel more at home, they can settle in. So the rent demand in those areas is really starting to escalate, and also in the CBD, the inner urban markets for units. So what I'm seeing is at the moment, rental yields are still too low in Melbourne to really attract investors. And of course, the state government's busy knocking them on the head with, land tax and vacant property tax and short-term rental tax and all these different deterrents. But I can see that as the number of renters starts to increase and rents start to go up, when they hit that magic 6% rental yield, which I think they will within a year, investors will start to flock into Melbourne in big numbers. And by then, of course, there may be a change of government as well, and a government that's more sympathetic to investors rather than to tenants.
It surprised me that, as they call him, Dictator Tan came back in. That government hasn't been gone a long time ago, but yeah, I think you're right. There might be an appetite for change. So we've touched on Perth, Darwin, Victoria, and Melbourne, I should say. I want to open it up to yourself, John. Those are the markets that obviously people are interested in, and I can see activity in, but often the best results are in the markets that people aren't necessarily looking at, because if you can get in before the green shoots, then you're getting 100% of that upside or that upswing without giving away all of your secret herbs and spices. Are there locations around the country that you're watching carefully that you think have some good fundamentals?
Well, we can, with our database, which tracks all of the suburbs in Australia, we can look at all the supply and demand trends. And interestingly, I can see the same thing occurring in Geelong and Bendigo as is currently occurring in Melbourne. So, good price growth, increase in demand at those lower priced areas of the market in Ballarat and Bendigo and Geelong. Very affordable. You can buy properties there for 400,000. Yields are slightly higher than Melbourne. So I think that they're areas that have got a lot of potential. And then moving away from Victoria, I mentioned the downsizer markets. I think, while you can still buy properties in the Fleurieu Peninsula for around 600,000, 700, excuse me, they are definite investment opportunities. And also around Queensland, where downsizers are moving to places like Hervey Bay, Bribie Island, those areas have also got massive potential. And you mentioned infrastructure, and it's interesting that, like in Queensland, where the Bruce Highway is being duplicated, and they're also improving access to Bribie Island and to Harvey Bay as well. So these areas are going to be far more easy, quick and safe to access in future. So they're probably the main areas I think that have got a lot of potential, where you can still buy now at around that 600,000-700,000 price point.
But John, I'd have to say that if you read the newspaper, you're missing the point, because it's all about the Olympics. So surely that's going to be the big driver. I mean, is that a question that you're getting sick of answering?
I get asked it all the time, and I'm actually going up to the Sunshine Coast this weekend to do a presentation up there, and I'm sure that that's what they'll all want to know about. And no one wants to be the bearer of bad tidings, and I've learnt the hard way that you never tell people, this area is not going to boom, because that's not what they want to hear. Mm-hmm. But the facts are that Olympic Games don't really make any difference to property markets in the long term. There might be a bit of a boom, largely speculative, that could occur. We looked at the Gold Coast Games, what happened there, it had no effect on the property market. Sydney Olympics, no long-term effect either. The only thing that happened in Sydney was that a number of new suburbs were created, the Olympic Park and the railway line and so on. So it was a boon for some people, but it didn't really affect the markets outside those areas. And why would it? Because you look at what's happening, limited construction of new venues may have some impact, but I don't see how, because most of the workers will be locally employed anyway. And then beyond that, you've got a lot of, million or two people coming in as spectators and then leaving again after the games. So where is that demand going to come from? I can't see it happening. It won't have a negative effect. I think that's unless they overspend and get into trouble. But in general, it doesn't really, these sorts of events don't really have any effect or beneficial otherwise on property markets.
I understand your point, because if a journalist rings all excited that they've thought of this idea that the market's going to boom in and around the Olympics, then you're going to be a bit of a wet blanket for them. But our listeners come here for the truth, not to confirm their cognitive biases. It's probably not a question that can be very, very quickly answered, but I wanted to sort of pick your brain about picking the bottom of a market, or let's say a market that's starting to simmer, that maybe has some upside potential. And we can probably look at, say, a market like Hobart at the moment that has had a big boom in the past, and it's certainly a market that no one's talking about. It seems to be bottom of the cycle. They're having their political problems at the moment, and that's probably not helping state-based sentiment. You mentioned populations not really moving into Hobart, but is there a data point that you could see maybe in the next month or two that would make you kind of think, okay, well, now it's worthy of my attention?
I think if you look at the turning points, the first ones you look at are the relationship of supply to demand, and one of the measures is median time on market, and these are figures that are quite easy to obtain now through CoreLogic and PropTrack. You can just go online and look at those numbers, and I've done that with Hobart, Tasmania, and invariably the supply is greater than the demand. So in other words, it's taking a long time, median time on market in excess of 60 days. All those indicators are pointing the wrong way, and they're saying, no, there's really no growth potential. Well, you look at the reasons for that, it's very much the population movement in Tasmania is older people coming in from the mainland and younger people leaving. So it's a net sort of zero, but there's about 15,000 people who come in. They're older people. They don't contribute to the economy because they're all retired. They buy houses for cash. And the sorts of areas they go to are the areas along the north coast and the east coast, St Helens and Penguin and Stanley, places like that. They stay away from the capital cities anyway. So it's a very flat market. It doesn't really show any sign of changing. Younger people leaving, as I mentioned, that doesn't help the rent demand either. So it's a very, it's a pretty state. I mean, I've got property in in Tasmania in the northwest, which we love. We didn't buy it as an investment opportunity for good reason, because it hasn't really done anything, but it was because it's a nice area to go to. And that's my view of the market. It's a lovely state, very beautiful, but not for investment right now.
Yeah, it's an interesting point, because places can be beautiful but not have investor potential. And I think a good parallel is some of the seaside markets, like Port Macquarie often sort of pops up because, well, why? Port Macquarie, Foster, places like that, New South Wales, sort of mid-north coast, pops up because it seems cheap, it's by the water, it's got nice lifestyle, but there's something fundamentally wrong with the local economy. The youth unemployment can be quite high. There's not as many opportunities. And as you say, it's a retiree destination who typically don't come in and start businesses or invest or spend too much money. They come, they batten down the hatches, they'll buy their groceries, but essentially, they'll use that as just as a place to be and launch their sort of retirement adventures from. But those aren't necessarily contributors to the local economy that's going to lead to market growth. Is that a fair read?
I think so. And quite often too, areas that are where you wouldn't want to live yourself can often end up being the best investment areas. And we've seen a lot of those. There's one example in Tasmania on the Hobart on the eastern shore. And there's one suburb there which had the highest rental yield in the whole of Tasmania. And I thought, well, now why is that? So we went and had a look, and we discovered it was the site of the maximum security prison for men.
Oh, wow.
And there was, sirens and razor wire, and we thought, why would anyone want to live here? Why has it got this high rental yield? And we discovered the reason is that all the wives and partners of the inmates in the maximum security prison like to live nearby so they can have conjugal visits and take the kids along. In the prison, there's actually a kiddies play area, so while mum and dad are having a cuddle, the kids can play outside. And so it's immensely popular for the partners, the wives, the girlfriends of the inmates, and that's why the rent demand is so high. So, you wouldn't want to live there yourself, but a lot of people do for reasons that are not immediately obvious.
I'm looking forward to John Lindeman's next hotspotting report, the maximum security growth locations in Australia. That'll be an interesting read. John, to finish us off, I know that this is probably a question that you get all the time, but I'd love to leave sort of listeners with either some advice in helping them to understand markets, or if you wanted to point at say, your top 3 areas that you think are worth looking at, I'll hand that over to you.
Right now, I think that excuse me, one of the best areas to invest in those inner, older western suburbs of Melbourne. You can still buy properties there, good, solid 3-bedroom homes for under 600,000. The yields aren't that high, but the demand is coming in from first-time buyers. And as I said, when the rents go up, investors will start buying. So you can really buy at the bottom there. I don't think they're not falling anymore. They're starting to go up, and that presents enormous opportunities for investors. Also, when the government changes next year, as I believe it will, that means we could get a state government far more sympathetic to investors, who will look at reversing some of those changes that have been made, which are not really encouraging investment in Victoria at all. So that's probably my best pick. And secondly, I'd say also have a look at Geelong and Bendigo, because those areas, the lower priced areas, have also got huge investment potential.
Awesome. I think you've dropped everyone off at a point where they're excited to go and do their research homework, John, which says a lot, I think. But thank you very much for sharing all of those insights and those red hot tips with us today.
It's been a pleasure, Mike, and I wish everyone all the best success in their property investing.
Cheers, John.
Thank you.